Hello and welcome to Options Guide TV. My name is Brian Overby. I am the author of the Options Playbook, and I'm going to be your host for about the next 30 minutes here on this, once again, volatile day in the marketplace. We see the S&P 500 index right now. We're down about 1%, a little over 1%, and the VIX index has spiked up once again, trading around 26 at this level. We on Monday did an S&P 500 index open wing butterfly, and we're sitting right there today. So very solid trade at this point in time, and I think that's the first one that we're going to review. So when we put the trade together on Monday, the market was at 55.18. 55.18. Well, that's when I took the screenshot. We were trying, the market for some reason was really moving. Okay. So we were trying to be 5 points out of the money on our butterfly. But when I took the screenshot, it wasn't quite there. And we're trying to fill the trade for somewhere around $2.50. I think $3 was ultimately where we might have got it at. Let's call it $3. Okay. So at that point in time, we're trying to fill it for around $2.75. Probably got filled at around $3 because the market just wouldn't sit still when we were doing that trade. So the strikes that we did is we bought the 55.20 strike call, sold two of the 55.20 strike puts, sold two of the 5,500 strike puts, and then bought one of the 54.85 strike put. The market was trading somewhere in this range, right up around here. Market has gone up and then came down. So now we're trading fairly close to the strike price. So this is the expiration date, April 30th. So this can only go higher. As long as we stay below the 5,500 strike, we're going to be good on this trade. And that all comes from the what if calculator. If you look at the what if calculator, and I'll zoom in a little bit on it, this is where the market is at. We started up here. But remember, we opened a wing. So right now it's saying it's trading for $5 because we have half a day left. We did the trade for about $2.70. That meant that if the market went below this level, below our lowest strike, below 5,485, that our butterfly was going to trade for $5. If we filled it anywhere from $2.50 to $3, we're either making $2 or $2.50, anywhere below 5,485. And that's what happens when you open a wing. You pay a little bit more up front, but you have the benefit that if you blow through your strikes, you can be profitable on this trade. Now, this is an alternative to a bear put spread or a put debit spread. You can still do it. It's still cheaper than doing the put debit spread, because in the put debit spread, you're just buying one option contract and then selling an option contract further out of the money. Here in this instance, we're selling two, and then we're buying an even cheaper option contract out of the money. So we're getting the trade done for less than if we just did the bull put spread outright, net debit spread, or however you want to say it. I'm sorry, bear put spread or put debit spread outright. But we have a potential for a home run, and especially on these shorter term options. And a home run would be anywhere inside this range, anywhere within the strikes of 55.20 on the upside and 54.85. So once we get up to this level, anywhere within this range, we're going to be doing just fine on this position. The maximum that it could trade for is $20, which would be $2,000. And get that one out of your head, because that means we're going to stop right at the strike price, right at our middle strike price, which, the market likes to settle around big round numbers. So who knows? We're at 5,497 right now. So we're close to that 5,500 level. And a very interesting trade. Very interesting trade. If I had more than one on, I would sell one now and I would go and let the other one ride. It's trading for $5. The difference between the short spread and the long spread is $5. So it's trading for what it would trade for if it blows to the downside, right? Now realize this is as of today. This isn't using the prices from Monday when we did the trade. It's saying that we're paying $5 for the spread. This is what the what if calculator is going to do. So wow, we're right at it right now. 5,499 right at that short strike. So if we settle somewhere close to that, you could see this value every hour go up by $1. Like it's going to just start accelerating in time decay and theta on the 30th. And we want to finish somewhere around 5,500. I think we also looked at an adjustment because the market was moving so fast when we were trying to get this set. But this is the trade that we're going to ride with. If we can land anywhere between this strike here and this strike here, we're going to do just fine on the trade overall. All right. So let's go in. If you have any questions, by the way, if you do put them in the chat box, happy to address those questions. All you got to do is put something in the chat box inside the Tradier Hub, inside YouTube. You can even do it through the x.com platform if you would like. And we will be able to address any of those questions during the event. Now, GDP numbers, I don't know. There's mixed information about GDP, and the numbers a little bit convoluted today, but the marketplace took it as a negative. And that's what really futures were doing just fine until that number got announced. And now we are down on the marketplace, and that was the big driver of it. So everything has came down with it only because they've gotten a little frothy over the last couple of weeks. If you go all the way back to April, we almost made it back, once again, almost a V-shaped recovery in that since Liberation Day, quote unquote, when the market started tanking, the marketplace has now came back and taken a lot of it back. Now it's giving back. And I do think that this is going to happen. News cycle is going to be ginormous over the next 3 or 4 months. Everybody keeps saying it. The uncertainty in the marketplace is what's driving the volatility. And we don't know where we're going to go to next. But the biggest thing is that it has hit the Mag 7 stocks today going into the earnings. And this is going to be the biggest earnings week. We're going to hear a lot about the consumer. Visa came out, had great numbers, and the market went nowhere. Booking.com had solid numbers, and the market went down, which is travel. So that was interesting in that. And now we're getting into Microsoft. So I want to get bullish on Microsoft. I really want to do this. And the biggest thing, and I'm gonna look to put this trade on in my own account, but my biggest thing is 390 is a big area on the chart. Let's pull up Microsoft, and I don't really like the fact that we're breaching that. Oh, by the way, I forgot about PayPal. We had a winning trade on PayPal. I'm wondering if we got out of that trade. We gave back almost everything. Where are we at in PayPal? Right now we're down 155 at 65. All right. So we got to look at the PayPal trade, but let's go in and look at Microsoft. And you should have gotten out. You should have gotten out on Monday. So if you didn't get out on Monday, shame on you. It was a 1 week trade. Well, actually, we went on a little bit further, but it was a short-term trade based off of earnings, and we got the earnings pop. So here's Microsoft, and I'm going to zoom in on this corner here. And between 395, you see right here, and here's the high spot on the candle, between 395, 300, 390, 395, and 400. Right in this area, look at how strong the candles are and the momentum, breaking through the 20-day, breaking through the 50-day. So strong momentum to the upside. We get to 395, which is an area of resistance without a doubt. And now we pull back, and now we're hanging at that 390 area. I'd like to start here. And then if we could break through the 400 area, this is a very, like if we got the earnings catalyst that could push us to that level, well, then I think the 200-day is in play. So right here, right around 400, at this level, this is where we got a little bit of clutter. Recent highs, I guess, going all the way back to March 5th. Now, on this instance, that would be very interesting. And Microsoft doesn't have the exposure to the tariffs that a lot of the Make 7 companies do. They obviously have the Xbox, where a lot of the components come from China, and that's a little bit of an issue. But their main business is the cloud and Azure, which is the name of their cloud services, and the bulk of their earnings is coming from that, and that's really doesn't have a ton of exposure to the tariffs. So I expect them to have good numbers, but we saw good numbers in Visa, and the stock went down. We saw good numbers in Booking Holdings, and the stock went down. So comments matter. After conference calls are important, but I'm still leaning bullish. Really want the stock to stay above the 390 level as we get to the earnings report today. I'd love it to drift right back to where it started. We're down $4 on the day, $4.24. Yeah, let's do it. All right. And I'm going to put this on closer to the close in my own account. And I'm just going to do a bull call spread, giving ourselves some upside above the 400 level if we can break out through that level. If we look at the expected move, the potential for the movement to the upside is there. If we look at the May 2nd expiration, all right, 390 is where we're at. So we're going to start by just looking at the expected move, or the most at the money straddle. So let's get rid of this. There we go. And buy that. Okay, so we're talking about a 17-point move. So that's 1760 divided by 389.76 equals. So we're looking about a 4.5 to 5% move. We're down 1% on the day. That's not bad. That leans towards normal on Microsoft. To be in that range, considering the volatility and what's going on in the marketplace. That's almost low volatility relative to the rest of the Meg 7 and their announcements. Okay. 17 points puts us at 407, right? That's where we're talking about. So we're going to kind of target that area. You got the 400 strike, which is going to be a little bit of a resistance area. If we can break through it, we can see some upside. I want to give ourselves some upside potential. I was thinking about doing the 395, 405 and going a little bit further out. But now we got to adjust that because we're down to this range. So I'm going to buy 395, 405 is not bad. We're going to go out to the 16th. May 16th expiration, 16 days away, 395. Gosh, do I want to stay there? The market was at 395. All right, let's just go a little bit out of the money. We're at 390 right now. We're going to buy the 392.50. And let's sell. We're getting enough premium on the 410. 392.50, 410. And I will, once again, I'm going to look to do this in my own account, but I'm going to adjust this trade. 672. So that makes it 380 plus, we'll call it 399 is where we'd need the market to get to in order to break even on that, if we held it all the way to the May 16th expiration. Expect this volatility to come in, so ideally we'd want the market to break up towards this level and not quite get there. Ultimately, you'd rather have it reach that strike, but then implied volatility can come in on the 410 strike and get this done for a decent debit and sell it for a decent net credit. But we need the 410 option contract to go away. Man, all right, I'm going to adjust it. If I'm going to do it as of right now, let's X-nay this. let's go here. Let's give ourselves a little bit better break even. So if we're going to do it as of today, after the market's down 4, we're staying right at that 390 level. Like I say, that's a very important level in my mind. Let's buy this one. Let's buy the $387.50, $387.50 strike call, and let's try selling the 405 going out 16 days. All right. And 8 points. Yeah, that puts us at 395. That's a little bit better. I like this one better. And we're going to send this to the what if calculator. So realize that this is an earnings trade and that it's mainly based off of earnings. We're going out a little bit more in time to give the stock a little bit of room to run after earnings. I don't necessarily need to get out of this as soon as I put the trade on. Now, the PayPal trade, that was 1 week long. We got out of the trade as soon as we put it on. Basically is the way that we would approach it on PayPal. We're now looking at Microsoft. I'm a little bit more bullish on the upside with Microsoft. And so in this instance, we're buying the 390. Right here is where our break even is at, 395.45. If we put this trade on, the expected move is right around 17 points based off of the short term option contracts, which is the 1 week or basically this Friday expiration. So in this instance, it's got the potential to move to the upside. 395. I didn't like the fact that we had to go all the way up to 400 in order to hit that break even on the out of the money option contract. So this is going to be the official paper trade. We're going to go out to the May 16th expiration. We're going to buy the $387.50 strike call, and at the same time sell the 405 strike call. We're doing this for a net debit of $8 or $7.97. We'll call it $8. Let's make it simple. All right, and our upside is the distance here 12.5 plus we're 17.5 points wide. 405 minus 387.50. Yep, 17.5 points wide minus $8. $8 is $9.50. So we have $8 of risk. We got $9.50 worth of upside. Need the stock to get to 405. If we hit the 400 level tomorrow and we can't break through it, probably just get out of the trade. And if it does break through it, well, then I'll let it ride a little bit and see if we can get to the 405 level by that May 16th expiration. All right. So last trade that we need to look at is the PayPal trade. And when we did on the open on Monday after the earnings report, they announced in the morning on Monday, we saw PayPal trading at up a couple of bucks. It had just like Visa, it had a solid report, and they're moving forward a little bit as on the PayPal scenario. They're doing things. They're definitely not just laying around and taking it, if you will. As far as the chart is concerned, it kind of looks like a downhill ski slope. If you go a little bit longer out in time, you see that it's just really been beaten up, and we finally gotten some strength, even in this marketplace, a little bit. And then, so we had to run all the way up, and it looks like in this instance, we bumped against the, what am I trying to say? The moving average, the 50-day moving average is where we kind of bumped up against it. Should have got out of the trade at that point in time. And if not, now we're back to around where we started, right about where we were when we just announced earnings at the beginning of the week. So 428. So we did a simple straddled the marketplace bull call spread in PayPal. Solid return. At this point, I would get out of the trade if I had it. Visa going down today. Let's see if that one's bouncing back after a solid earnings report. Yeah, okay, we're bouncing back a little bit here after a solid earnings report. I think has kind of drug PayPal down a little bit. But Visa, I think, is, they didn't have bad numbers as far as the consumer is concerned. And that's where you're kind of getting a little bit of the insight. A little bit slowing growth, but it wasn't horrible overall. So Visa, the fact that it's bouncing back a little bit today, I can see some upside momentum in Visa. As a matter of fact, I wouldn't mind doing a skip strike butterfly right around that 350 level. Let's see where it ends up today. And let's look at Visa, maybe going out a couple of weeks and looking at a skip strike butterfly right around the 350 level, which is a little less than a 1 standard deviation move. The delta is 32. Yeah, I could see doing something like that. 16 days out. Buy, sell. Yeah, I don't mind that. Let's look at it actually, because you're getting 2 here, skipping this and buying that. Too small of a net credit right now. 9 cents going out 16 days. So I think I would adjust it and look at it. Let's see where we close today. Maybe we'll come back on Friday and we'll look at that in Visa, because I do see some upside potential. Want to sell a little bit of, sell some premium and give ourselves a little bit of upside. So any questions that we have at this point in time? $72 strike. Okay, so on the PayPal, we got up to the 72 strike. How close did we get? We got up to 67. So we were looking at selling the 72 strike and paying $1.50 for that trade. And we didn't quite get there. We got up to 67. 72 is where we were at. That's that upside high right there. We're now at 60. We're right back to where we started at 64.81. Yeah, if there's anything left in the trade, we're going out to May. I'd want to get out at this point in time if I have that position on. If I didn't get out on the initial move to the upside, then I would close it today and just get out of the trade. All right. Any other questions? Thanks for stopping in. Please check out Options Guide TV inside the Tradier at hub.tradier.com. Follow me on X. My handle is @BrianOverby. You can watch all of these videos on X.com via the Tradier platform and via my X handle. And then lastly, you can check it out inside the Tradier YouTube channel if that is your preference. We'll see you this coming up Friday for the next edition of Options Guide TV, 11 a.m. Eastern Time, and hope to see you in the hub.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.